Will rising tariffs trigger the next big wave in the markets? With inflation heating up and geopolitical tension brewing, today's moves could be tomorrow's headlines. Before you place your next trade, you would want to watch this. Hi, I'm Francois, your market analyst here at ATFX Africa. And in today's market brief, we are digging into what's really moving the euro, gold, and the S&P 500. With US inflation data in focus, escalating trade tensions, and central bank decisions looming, traders are navigating a high-stakes environment. So let's unpack it. The euro is hovering around $1.16, near a 3-week low after a turbulent week dominated by trade rhetoric. President Trump announced a hefty 30% tariff on EU imports starting August 1st. However, he's left the door open for negotiations, creating a tug-of-war between risk and relief. The EU, in response, is holding back on retaliation, at least for now, extending a diplomatic window until early August. On the policy front, the ECB is expected to keep rates unchanged this week, but with traders still pricing in one more rate cut for 2025, certainty is creeping in, especially as the ECB reportedly revises its economic outlook due to tariff risk. Interestingly, the euro is still up 13% year to date, buoyed by previous dollar weakness and optimism around increased German fiscal spending. Euro USD has dropped to near 1.161, extending its week-long losing streak. It did, however, find support just above 1.159, with buyers stepping in ahead of today's producer price index release. The currency pair is still holding within that descending channel as we await a breakout to either side. Watch for resistance near 1.163 and stronger upside hurdles at 1.169. On the downside, a break of 1.159 could open up space for a test of the 1.15 psychological level. Short-term bias remains cautious as traders await fresh macro cues.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Gold prices are trying to regain ground after a 2-day slide, hovering near $3,335 an ounce. While hotter than expected, US CPI initially dragged bullion down, ongoing trade concerns and global uncertainty are lending it some safe haven support. Trump's sweeping tariff agenda, including 19% duty on Indonesian goods and threats of 200% tariffs on pharmaceuticals, has reignited inflation fears, even prompting calls from the White House for rate cuts. But Fed officials remain cautious, with core CPI at 2.9%, still well above the Fed's 2% target. Markets are now paring back expectations for near-term rate cuts. Treasury yields have also risen, and that's helping cap gold's upside for now. Technically, gold is trapped within a key $3,300 to $3,350 range. The price briefly dipped below the 21-day EMA, but is now bouncing off the 50-day EMA. Momentum indicators remain mixed, suggesting indecision. A break above 3,350 could retest 3,366, while clearing 3,375 might target the all-time highs at 3,500. On the downside, watch the support near 3,310 and then 3,282. Caution is warranted amid conflicting signals. The S&P 500 dropped all the way down to 6,230 after Tuesday's sticky inflation print and is currently reflecting investor caution ahead of today's key earnings and economic data. Corporate results are rolling in, with big names like Bank of America, Goldman Sachs, and J&J on the docket. But Tuesday's hotter CPI print has cast a long shadow over risk sentiment. Tariff jitters are making it worse. Trump's aggressive stance of 30% tariffs on EU and Mexico, and more on the way, has sparked fears of retaliatory trade wars. While Nvidia gave Nasdaq a lift with a 4% rally after its China update, other sectors faltered under the weight of uncertainty. The S&P remains below its record high of 6,302. Immediate support lies around 6,190, while resistance sits firmly at the recent highs. A breakout or a breakdown will likely depend on how today's PPI data and corporate earnings unfold. Momentum remains intact, but sentiment is fragile. Traders should stay very nimble. With US producer price index data due later today and the Jackson Hole Symposium just around the corner, the market may be gearing up for its next big shift. Will inflation force the Fed's hand, or will earnings steal the spotlight? Well, we'll unpack the implication in tomorrow's brief. And then that wraps up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.